A few months ago, we explored the idea of merging every Bitcoin metric into one all-encompassing indicator. And the results were unbelievable. And now Bitcoin has surpassed $100,000. It's probably time to revisit it. Looking at this all-encompassing everything indicator we created a few months ago and give a general update as well as maybe a key change we can make to the chart to potentially make it more accurate going forward. So if you weren't already aware, a few months ago we made a video which is here titled "What if we combine every Bitcoin metric?" which was incredibly well received, and if you go through the video it explains the logic behind how we're calculating everything, as well as the performance data of using this, which was exceptionally high. And yeah, I definitely recommend watching that if you haven't already. Essentially, what we're trying to do here is not actually use every single Bitcoin metric because there's just too many. But here, if I pause the video, we can see using the Bitcoin trajectory catalysts, which is the macroeconomic data, Bitcoin fundamentals, and on-chain data, as well as technical points. These are the most influential factors impacting the price appreciation or depreciation of Bitcoin. Once we kind of get a perspective from each of those, it gives us a general overview of what Bitcoin is doing. So just to quickly run through things, what we have included is the global M2 money supply versus BTC year on year, which actually over the past few months has been declining, which is a little surprising considering the bullish price action we've had. The Bitcoin stock to flow model oscillator, which is actually going to be the key basis of potentially how we're going to be updating this metric, as well as that the Puer multiple, which is looking at miner earnings on a daily versus yearly average in USD denominated terms, the MVRV Z score, the spent output profit ratio, active address sentiment indicator, the Bitcoin Crosby ratio, and if we go over to TradingView, we can see how that looks in chart form. What we can see here is this oscillator down at the bottom is exactly how we last used it, which currently, if we look at this, is showing that we're about 55.49 on this scale, which really doesn't necessarily mean we're anything 55% of the way through the bull cycle potentially. What we can see is when we reach these levels before, Bitcoin can, in just a matter of a few weeks, really reach these upper red sell regions. But it is interesting to note at this point in time, we are still lower than our previous all-time high set at $74,000. However, like I said, we are making a potential update to this metric. Like I said, the stock to flow model oscillator. So this isn't to say I don't believe in stock to flow explicitly. This isn't to say I don't think it's a useful tool. However, taking into consideration that for this to surpass this middle value, this one model variance, Bitcoin would have to surpass $400,000 within just a few months' time, leads me to believe that maybe this is going to slightly skew the data in favor of more upside than might actually be possible. So what we can do is actually go here, and what I've done is made an alteration within the code so we can actually toggle on or off the stock to flow value. So what we can do is just zoom out and see it's been historically very accurate. It's called market peaks and bottoms exceptionally well. These are all just equally weighted, so we're not overweighting liquidity or the Puer multiple. They're all very evenly weighted. I don't want to overfit this at all. But if I turn off the stock to flow, so it's now not using that, it's not counting it, it's weighting everything else, we can see, did it change? Yes, it did change very slightly. We can see that it still looks very similar, but it maybe gives us potentially more confidence in this metric's accuracy going forward. We can see this has actually bumped up the value on this metric for where we are in our current cycle to a value of 62.65 as I film this. Still lower than our previous all-time high we set at 74,000 earlier this year. But I do think potentially excluding a model that actually forecasts Bitcoin price going forward, and we don't necessarily know if that's going to come to fruition this cycle, may improve its accuracy. Rather than using a price projection tool, we're going to be using data that's just reactive. We can see the live real-time global M2, Puer multiple, MVRV, spent output profit, active address, and Crosby ratio in real time. This isn't independent on Bitcoin's price appreciation into the future. These are all independent metrics. So I do think potentially if we exclude this, we may have more accurate data going forward. But let me know your thoughts in the comments below and on social media, as well as if you have any suggestions on what we can add into this metric to potentially improve its accuracy going forward. But just back to the metric, what we can see is ultimately things still look pretty decent. I think Bitcoin still has plenty of upside room to go, but what we can see is in previous cycles when we've reached this upper middle deviation band, which we're currently at. Once Bitcoin has surpassed this, we've rallied exceptionally hard into this upper region. So unless we're going to see something like we saw here, pretty much as Bitcoin broke $20,000 in the previous cycle, we had a slight retracement before we bounced higher. If we were to see something like that, that'd actually be pretty healthy according to this metric and would probably give us a little bit more upside room going forward. Or if we do continue rallying, what we can do is just take previous examples for some reference. So that was at $20,000-ish when we broke above this, and Bitcoin then rallied to a 3x to $60,000 before topping out in this metric. And similar situation here. Once Bitcoin crossed above this level here, Bitcoin's price was at around $3,000-ish before we did pretty much a 6-7x to $20,000 practically. So if Bitcoin now above $100,000 now that we've surpassed that level last week, if Bitcoin can continue rallying, we may be about to enter the exponential phase of this cycle where Bitcoin has 10,000 daily candles, where we reach who knows how high. So it's very exciting to watch, and I will continue doing updates on this metric. But let me know your thoughts on how we can improve it even further, and I'll get back and do an update in the coming weeks. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on BitcoinMagazinePro.com, your #1 source for Bitcoin analysis. So just to summarize, analyzing the market from multiple perspectives was the main goal of creating this all-encompassing Bitcoin indicator. And what we could see briefly in this video, but mainly in the previous video we did and the weekly analysis we provide to site subscribers, is that this approach has worked exceedingly well and has provided exceptional profits for the smart investors who would be looking at the market from multiple perspectives and taking action, accumulating and distributing based on that. And what we can see is that even as Bitcoin surpassed $100,000, that there is still plenty of upside potential remaining in this bull cycle. Even if we do tweak the metrics slightly to not include the stock to flow model oscillator, either way, there's still plenty of upside room to go. And especially looking at historical comparisons of similar points in the cycle, we can see that Bitcoin, if we were to follow 2016-2017, may have a 6x left in it. If we were to follow 2020 into 2021, we might have a 3x left in us, which would both be amazing. Even if we only doubled from our most recent highs, then that's still a pretty good bull cycle in my eyes. And what we can see is the reason why this maybe isn't considerably high, especially seeing that Bitcoin has continued to set new all-time highs, even lower than our previous all-time high we set around $73,000, $74,000, is mainly due to the macroeconomic factors. What we can see in the chart above me here, the global M2 versus BTC year on year has actually been contracting as global liquidity has slowed down, actually, as central banks have tightened their current fiscal policies. So potentially over the coming weeks and months, as we see a pivot in that, and we maybe get more bullish and favorable macroeconomic conditions, not only does Bitcoin's upside potential increase substantially, but maybe we continue to see this bull rally to, like we said, unknown highs. And what we can also say is, excluding any black swan events, by pretty much every metric, we're not overbought or too overheated or anything. This bullish price action is likely to continue into 2025. If you liked this video, then please visit BitcoinMagazinePro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. Let me know what your thoughts are on this all-encompassing everything indicator, and whether you think we should maybe exclude the stock-to-flow model oscillator, and if we should replace it with anything else, or potentially just whittle down the metrics we have included in there to make it a little bit more versatile, potentially less things that can potentially influence the data. Either way, let me know your thoughts below in the comments and on social media. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.